In this video, I'll be providing an update on the performance of my InvestEngine ISA portfolio. For those new here, I have a goal to reach 100k stocks and shares ISA portfolio by 2027, and I'm using InvestEngine as my primary platform to achieve it. This month has actually been one of my best performing months since I started the portfolio. But before we take a look at that, let's first, as always, take a look at what's been happening with the markets over the past month. Let's start with the S&P 500. We can see it's been a positive month for the US stock market, as this index is up by 2.18%. I'm recording this on the morning of Monday the 27th of January, and the market hasn't yet opened in the US. But it looks like there could be a significant fall in tech stocks when the market does open. So by the time you're watching this, the performance probably won't look as good, and we'll come on to the reason for this. However, let's start by going through why much of the month has been positive for the US. The most significant factor for the positive performance is made obvious from the graph, in that we can see it was a relatively flat month until the 15th, where something happened to cause a huge jump. In fact, the S&P went up by 1.8% in one day on the 15th. The reason for this was better than expected US inflation data, specifically core CPI inflation, which is the Federal Reserve's preferred inflation measure, as it excludes volatile energy and food prices. Core CPI inflation rose by just 0.2% month on month in December, the smallest monthly increase since July 2024, and below the forecast of 0.3%. This is important because inflation figures are currently a huge driver of US stock market performance, as any regular viewers to this channel will know, since we always bang on about it. Lower inflation means we're getting closer to the Fed's 2% target, which increases the chances of interest rate cuts, which would be great news for the stock market. So let's hope this trend continues. Another big factor in the US this month was the start of Trump's second presidency. Markets seem to have responded positively so far, possibly because he's already started implementing policies perceived as pro-business like deregulation, or possibly because he's avoided pursuing market-unfriendly policies like hard tariffs. Whatever the reason, the market seems to be cautiously optimistic about his America First agenda, for now at least. The last big factor this month in the US has been better than expected quarterly earnings from some of the biggest players. One standout was Netflix, which completely blew past analyst forecasts and saw stock rise by 9.7% in a single day. Good earnings like this really do have a positive impact on the stock market, so hopefully when the quarterly earnings of the rest of the S&P come out, the positive theme continues. So these three factors overall have had a positive impact. But a negative factor came into play on the day of recording, which likely pulled back on the gains of the S&P. This is the fact that there's been advances by Chinese AI startup DeepSeek, which has created doubt on whether the US can sustain its leadership in AI. Their chatbot climbed to the top of the downloads chart in the US Apple App Store, so it's become a big rival to ChatGPT overnight. This is likely to lead to a big drop in US tech stocks over the short term, as the market is of course volatile in the short term. But at the moment, no one really knows the medium term or long term impacts. So overall, it's largely been a positive month for the US, albeit with a spanner in the works on the day I'm recording this video. If we now bring it closer to home, we can see these European indexes actually outperformed the US. The Stoxx 600, a broad-based European index, was up by 3.79% over the past month, and it hit record highs during the month. This was largely thanks to easing fears over US tariffs, and strong corporate earnings from companies like Adidas. Similar factors helped the UK's very own FTSE 100 also have a great month, as this index was up by 4.0% over the past month. The FTSE also set a record high during the month, albeit this was very brief. Interestingly, the weakened pound against the dollar also played a role in the good performance. While a weak pound may sound negative, it actually benefits many FTSE 100 companies because they earn a significant proportion of their revenues and profits in dollars. So overall, at the time of recording, it's been a relatively good month for the global stock market. And given my portfolio is globally diversified, this should be good news for me. Now we know this, let's bring up InvestEngine's app and take a look at my portfolio. We can see that my portfolio currently has a balance of £45,560. And over the past month, my portfolio is in the green. I'm up by £1,780 in pound terms, and 3.77% in percentage terms. And we can see from the graph here how the portfolio has evolved. And it's a very similar graph to the S&P 500, which isn't surprising given that this portfolio is heavily weighted towards the US. For much of the month, the portfolio was stagnant. Then around the 15th, there was a spike, which is the same time as that US inflation data came out. After that spike, the portfolio was stagnant again until there was an increase from my monthly contributions, which is 1,500. I made a 1,500 monthly contribution on the 24th of January. So overall, in this month, if we compare the portfolio value at the start of the month to the end of the month, I'm up by around £3,280, with 1,780 of that coming from the investment return and 1,500 of that coming from my monthly contribution. So a relatively good month for my portfolio. If we now take a look at my overall portfolio's performance since I started investing in it by clicking on the Max tab, we can see that my portfolio is up by £7,110 overall in pound terms and 32.26% in percentage terms. And the really nice thing here for me is looking at this graph and seeing a gap emerge between the green line, which is the total investment value, and the blue line, which is my total contributions. As the gap there is the investment return, it's the money I'm making on my investments. And that gap is getting bigger, which is really nice to see. So hopefully that trend continues. If we now bring it back to the performance this month, and let's break down how that performance has taken place in terms of individual ETFs. Let's go through them one by one as always and take a look at how my individual ETFs have performed. Let's start off with the HSBC MSCI World. We can see that this ETF is up by 3.49% over the past month, and if we click on it, we can see that the graph for this ETF is very similar to my overall portfolio's graph and also similar to the S&P 500's graph, with a massive spike around that inflation data date. What you'll also see here is something I've not seen before when I've done these portfolio updates in these two tabs, total return and price return. And what this is the total return includes any dividends, say additional income from the ETF, as well as the asset price increase, whereas the price return only includes the asset price increase in the calculations. So if we click between the tabs, you'll see there's no difference at the moment in terms of the return, because there's been no dividends in this ETF over the past month. But if we click and filter for 6 months, when there's been dividends for this ETF, we can see that the price return differs to the total return. So the total return is higher at 13.73% in percentage terms, £3.77 in pound terms, and the price return is lower at £3.67 in pound terms, 13.37% in percentage terms. And I like that InvestEngine have added this feature, or I just haven't noticed it, in that it now allows me to have a way to see the total return for this dividend paying ETF. And I think that this only applies to dividend paying ETFs, because there's no need for it on accumulating ETFs because they don't have dividends. You don't need to split between total return and price return. But for this ETF, I'll definitely be using this feature going forward, so I can include the dividends in the total return figure when I analyse this ETF. Let's now take a look at the performance of the next ETF in my portfolio, the iShares MSCI World Small Cap. This fund has also had a good month. It's up by 4.59%. And if we click on it, we can see around the time of the inflation news, there was a huge spike in performance. And this isn't surprising, as small caps tend to be very sensitive to interest rate movements. So if this inflation data has set a pathway for interest rate cuts, it will be extremely good for small caps, as they tend to rely on borrowing to fund their growth. And for this reason, I've been hoping for rate cuts from the Fed for a long time to help with the performance of this ETF. As overall, this is my worst performing ETF since I started investing in it out of the 4 in my portfolio. But this month, it's had a really good month, so hopefully that continues, and hopefully we do see rate cuts this year from the Fed. If we move on to the next ETF, it's the iShares Physical Gold. And this is the best performing fund in my portfolio this month. It's up by 6.69% in percentage terms. And if we click on it, we can see that it's been a good month overall for gold, and it's been a steady increase throughout the month. The final ETF in my portfolio is WisdomTree's Cloud Computing Fund. This is my passion fund, my passion sector. And this also had a good month. It was up by 3.46% in percentage terms. And again, this fund, like my other equity funds, is heavily exposed to the US. So because the US stock market did well this month, this fund will have benefited from that. So overall, it's been a relatively good month for my portfolio. As all my ETFs are in the green, I've had relatively good percentage return, I've had a relatively good total pound return too. And it's nice to see that my portfolio is getting close to that 50k mark. Thanks for watching.